December 14th, 2023. Today we got a breakout below this wedge, essentially, and a measured move down a bit to here. That was exact. And we also got a measured move down of the bear surprise in the middle of the day. It's also a midday reversal on 41, but we got a measured move down, essentially, of that, more or less. So this is a pretty big magnet cluster down here, especially after you have a spike and then a channel and a breakout below the channel. You have to be thinking that, maybe only a 25% chance that this is a measuring gap. And most likely this is going to end up being some sort of exhaustion gap and we're going to get a reversal up. So, bars like 53 are a lot more buy the close bars than they are sell the close bars because of the breakout below the channel. But I'll go over that more later. I thought today it might be important. The all-time high is up in here somewhere. So I thought it was possible today that we test it, but the market is generally pretty overbought. And when you get a big, strong trend the day before, usually there's about a 75% chance of 2 hours of sideways to down trading to start the day, which is we got a couple hours sideways trading and an hour or so of down trading. And we end up getting essentially a second leg up on the gap from this big move up. I don't know if the channel was an exact leg 2 measured move. Probably not. Yeah, not quite. But anyways, big bull bar on bar 1, but a tail on the top. If I'm a bull, I would rather wait for follow through. Bulls need to be really convincing in order to make me think that we're going to go a lot higher today because of just the overall context. Bar 2, bad follow through for the bulls, but probably buyers below 1. Not a lot of traders willing to sell below 1 after such a big gap up and a big bull bar. Bar 3, essentially testing the bar 1 close and high. It's a double bottom with 1 and a potential swing up. But I think, again, in this context, it makes a lot more sense to wait for follow through. You're also buying the top of a tight trading range if you're buying the double bottom on 3, so it's not all that good. 4, reversal bar, and you're far above the moving average. So this is not very good price action for the bulls. This is very sideways price action. So we're probably going to go sideways till we get to the moving average. I think that in general, I think it's probably okay to sell below 4. It's a swing. You're looking for, probably faster follow through, but you have to keep in mind that 3 is pretty big, and the bulls who bought above 3 did a reasonable thing, so they're probably going to be let out at break even. So you have to be thinking that bulls are probably going to get some sort of second leg up. So you can't be surprised when you get bad follow through on 5 and then a bar like 6. You probably just have to sit through it and hold as more of an always in trade. Follow through on 5 for the bears, but a tail on the top, buyers at the bottom of the tight trading range. You can see bears who sold below 4 were not even able to make 5 points. So I don't think 4 points is a reasonable scalp on this day. These are 8, 9, 10, 11 point bars. So you probably need to be scalping for 5 points, I think, at the bare minimum. So I think it's reasonable to think that bear is not able to make a scalp buying or selling below 4. I don't know if this one's 5 points above, it didn't. But traders more likely to sell above 5 than to sell the close of 5. You can see as 6 traded up, traders sold above 5. And anyone who bought during or above 3 or as 4 was forming had a chance to get out around break even during 6, and they took it. 7, a bear bar closing near its low. It's probably okay to sell it. It's still always in short from, I think, or it's probably not quite always in short, to be honest. But if you sold below 4, you would still be short. So I know that once I got another bear bar closing near its low, I wanted to sell that. So maybe you don't take this sell, but you sell below 7 and put a stop above 6. Since my stop would be above 6 had I sold below 4. That's a reasonable thing to do, I think. 8, bad follow through, which isn't all that surprising. You have to be thinking that 7 could be a second leg trap, 1 pullback 2. So that's the problem with it. And you're also at the bottom of a trading range. But I still think overall it's okay to be short. 9 trades above 8, which, when you see that, you got to be thinking 1, pullback, 2, pullback, and then we're going to get some sort of third leg down. Traders were hoping the third leg down would be climactic and get to this high, but it was unlikely. You can see traders who sold below 9 able to make a 5-point scalp exactly. So if you sold below 9, you were able to make exactly 5 points, and then those traders took profits knowing that this was probably just a third leg down. Additionally, 1 and 3 are pretty strong bars, right? So when you get that strong of bars early in the day, you have to be thinking that it's more likely to be a trading range day than it is to be a big bear trend day. 13 is a wedge bottom, but no bulls have made money buying above bars yet today, right? If you bought above 3, you could have made 3 points, and I don't think it's reasonable to buy above, a 9-point bar with your stop probably having to be, more like 11 or 12. Let's check. More like, 11, 12 points away and scalp out with 3 points. Your risk is, you're risking essentially 4 points to make 1. That's really not a good idea. So 11, a bull bar after a wedge bottom, but the channel down is pretty tight. So the first reversal up is probably going to be minor, and bulls still not able to make money. Bad follow through on 12. When you get a doji follow through bar on 12 and then you get 13, you have to be thinking 13 is towards the top of the channel, A, and B, it could be a second leg trap, 1 pullback 2. So this could be a 2-legged correction, and we're going to get at least 1 more leg down. So not really a great buy above 13. I would wait for bulls to make money and then look to take a trade. 14, a big bear bar closing kind of near its low, but you can see there were buyers at the new low. This was strong enough. These are bull bars closing near their highs. This is a good bull bar. That's a good bull bar. This is all strong enough to make me think that, it's probably not a good idea to be selling this low. It's probably better to be buying that low. And if you're an always in bear, you probably get out here, but I don't think you want to be selling anywhere down here. It's probably better to just wait and see what happens. 15, probably just profit taking. You can see if you bought below the low, see if you're able to make 5 points. You need 5.25 points to make money on a limit order. What's the low of this? So it needed to get to 77.25, and that's exactly the high of that bar. So bulls who bought below bar 10 were able to make exactly 5 points on 15. Buyers below 15, bull bar, so most likely buyers below. And you can see on 16, there were buyers below 15. And if you look at 16, though, I thought it was, first off, 16 is a bear bar. So while it is, again, a potential wedge bottom, and we could get some sort of move up to at least the top, because if this is a trading range day, and it probably is looking at this with the strong bull bars and the strong bear bars, if this is a trading range day, traders who do reasonable things are probably going to be able to get out of break even. And while it wasn't a great idea to buy above 13, I don't think it was even a good idea. You're probably, you probably did a reasonable thing. Whereas if you had a wide stop and were willing to scale in, you're probably going to make money. So, you have to be thinking that traders who bought here are probably gonna be able to make money, and we might get a vacuum test up, which is exactly what happened on 17. But I think there's a lot of problems with buying above 17. If you're buying above 17, you have to note that, any trader who bought above 16 is probably going to scalp out with the minimum scalp, since they're the first bulls to make money today are traders buying above a bear bar, which is a problem, right? And right here is a 5-point scalp for those bulls. So you have to realize if you're buying above 17, if you're buying above 17, you're buying right where bulls are probably going to scalp out with 5 points. You're also buying right where the bulls who bought above 13, how do you think they felt if you bought above 13 and you see 14? Are you happy to see 14? No, you're disappointed. And all those traders who scaled in lower are probably going to be pretty eager to get out. So if you're buying 13, you're also buying right where you're expecting traders, to be disappointed. And you're also buying the top of this trading range that started right here, because it went from essentially, bear trend to trading range. And so you're buying the trading range. And also 16 was a bear bar, right? And this is probably a trading range day. So you have to think that the traders who sold above 16 did a reasonable thing, and they're probably going to get out of break even. So, essentially, bulls do not have as much going for them. This just looks like a vacuum test to the top of the trading range. And if it's going to go, you're going to get a good bull bar closing near its high on 18. And then, you're essentially going to get a duplicate bar of 17 on 18 if this is going to go and be a giant swing. And then you can just buy that follow through instead when your probability is much better and you have a bunch of trap traders. So I don't think it makes sense to buy above 17. Bad follow through for the bears or for the bulls on 18. And you can see if the traders who do buy above 17 are probably A, willing to scale in lower, so they're buying more down here, and B, they're quick to get out. So you buy above 17, you're scaling lower. On 18, 19 gets back to your entry price. You can see what happens when it did. Those traders, they took profits, and that's causing the bear bar on 19. Any trader who's still long is going to exit below 19. 19 is a double top bear flag. Bears are hoping essentially a measured move down of at least this. But I think, my problem with 19, I think 19 is an okay swing sell, first off. But you just had bulls buy above a bear bar and make 5 points. Why are bulls buying above a bear bar and making 5 points if this is a bear trend? So that was kind of my problem with this trade. We had kind of a similar thing. I think it was last week. I just want to go over this example because I mentioned it in that review as well. Here. So bears sold below a bull bar and they made 5 points. You can see that, right? 5.5. So bears selling below this bull bar were able to make 5 points. So this bull trend, you have to be thinking, yeah, it's technically a bull trend, but why was there a strong couple bear closes, and why were bears making money on stop orders below bull bar? That doesn't make sense. Similarly over here, you're thinking, yeah, this might be a bear trend, and it could be, but it's more likely you're selling the top of a bear channel and traders are going to exit at the bottom of the bear channel because, why are stop order bulls making money above a bear bar? It doesn't make any sense. 19 or 20 follow through for the Bears. It's kind of disappointing. There's tail on the bottom, but if you took the trade, you knew it was lower probability, so you might get bad follow through. I did sell 19 and I sat through 20. I thought that it was still reasonable to be short. If you're selling, it's a double top bear flag. You're taking a chance. We end up getting a breakout down, so I thought it was still reasonable. Big outside down bar on 21. You're towards the bottom of a channel line, so it's not all that great to be selling below 21. But I definitely think you can for a swing. But the problem is the math. Your 1-to-1 is not really all that great. What are the odds we're going to race straight down to here before we get a pullback? Not all that good. And the first target is the high of yesterday. So there's probably going to be some support at the high of yesterday. So again, what are the odds that, selling below here, we're going to break strongly through yesterday's high and get you 1-to-1 pretty quickly? The odds aren't very good. And that's why I think you get bad follow through on 22. An inside bar on 23. You can see any bears who did take a chance and sell below here, so scaled in higher, selling essentially the close of 22, trying not to let it trigger, knowing that most bears will exit above if it does. And then they get out around break even on their first entry and with profit on their second entry. 24 is a double top or double bottom with 22, but there's a big tail on the top, so I don't really want to buy. Though, that stop order bulls have made money today, so it's probably better. It's okay to be looking to buy, especially with all these strong bull bars. We're probably going to get some sort of move up. Bad follow through on 25. It's a double top. You could sell 25, but I think bears kind of had their chance to make this collapse. I thought 19 made more sense. And if we were going to collapse, it probably would have done it with 21 and we would have continued down in some sort of channel. I think 25 is just kind of a weak setup. 26, essentially a doji bar. You're in the middle of a tight trading range at this point. And then, if you sold below 25 and you get 26, you just need to get out. That's not what you wanted to see. If you were selling below 26, if you're selling below 25, you wanted to see a bar like this. You wanted to see a big bear bar closing near its low and trap a bunch of bulls in. And that's not what happened on 26. So traders buy back their shorts at break even, causing 27. We close above the high of the tight trading range, which is the 25 high. Can you buy above 27? You probably can. But I didn't because, I was looking at, what happened on this big bull bar? They sold it. What happened on this big bull bar? They sold it. What happened on this big bull bar? They sold it. So what's going to happen on this big bull bar? Are they going to buy it? Maybe, but they've been selling big bull bars all day. I think this is the best context out of any of the bull bars to buy above 27, but I still personally wanted to wait. And the follow through on 28 and 29 is just not ideal. It's kind of a lack of momentum. If you're buying above 27, you want to see a good follow through bar and strong, a strong bar that makes you confident that you're going to get to a new high on the day. And you just don't get that on 28 or 29. 30, a doji bar, essentially a high one. I thought, you could buy above 30 or you could wait for the close of 31 and you can take the buy above 31. The problem with 31 is you're getting higher in the trading range. So I think if you buy above 31, you pretty much just need to be willing to get out below any bear bar, but it's still always in long. So it's okay to take for a swing. 32, follow through for the bulls, but not, all that great. There's a tail on the bottom. 33, more follow through for the bulls. So 3 straight bull bars. We're probably, at this point, I thought we would probably get to a new high on the day. I thought we might pull back first, but in general, it's reasonable to think we were going to get to a new high. My only problem with it is that a lot of times, when it starts to become obvious you're going to get to a new high, you just get vacuumed straight up there. And we were just kind of getting, bad follow through. But bulls were doing just enough to keep traders in, right? You get 34 outside down. Most traders would try to get out below 34. And you can see on 35, we ended up getting a doji because the bulls who bought above 33 were hoping that they were going to get a vacuum test up to the high. And they ended up getting a really disappointing bar on 34. So what they did is when 35 traded up to their entry price, you buy above 33, you're disappointed 34. They're exiting around break even during 35. So they exit around break even, which is disappointing for the bulls again. And now you have essentially a micro double top with 35, but it's a doji bar. But I still think a lot of bulls will exit below it because their premise is that we're going to get up here, and we probably would have just gotten vacuumed up if that was going to happen. But you end up getting a doji bar. So traders are thinking, well, something's wrong with what I was thinking. This might be a couple legs up, 2-3 legs up in a trading range, and we could get test down pretty quickly and pretty deep. So I don't really want to do that. And that you had trap bears who sold above 26, and you had trap bears who sold above 30. So you have a couple open gaps, but if it's a trading range day, those gaps can fill pretty quickly. So what some traders will do is buy the close of 36 with a pretty tight stop somewhere here or here and hope it doesn't trigger. And they got the bull bar on 36, but disappointing follow through on 37 and a strong bear bar closing near its low on 38. Again, 38, traders are going to exit below 38, but it doesn't trigger. You get 39, but the traders who bought up here, disappointed in this, are getting out 39. Doji bar on 40, you could say spike, pullback channel. So this is some sort of channel, and we might develop into a trading range, but you're at the overall top of the trading range, so traders should be more looking to sell. By the way, before I get to 41, I'm going to be traveling back to Massachusetts, where I'm from, for the next, early next week. So my reviews, I'll have one tomorrow and I'll have one on Monday, but I'm just not sure how they're going to look for the rest of the year, essentially. I'll do them when I can, but definitely starting next year, it'll be back to the regular everyday schedule, but I'll be putting them out obviously when I can. So anyways, big bear bar closing near its low on 41. And I think this changes, the market conditions. I think we're always in short now below 41. It's a big bear surprise. You needed it to close below the moving average, and it did. So that's good for the bears. Bulls are hoping they bought below 40 and they're going to be able to scale in and make money since they did a reasonable thing. The bulls who are doing that, they know they have a really wide stop. They know that, that this might continue down. I don't think any individual trader should be holding long below 40. I don't think any individual trader should be long, period, below here or here, but at the latest you have to get out below 41. And I think traders exit below 41. Always in traders exit below 41. Bears know that, and it's reasonable for always in bears to sell. It's a midday reversal closing strongly. We probably, still 82.5% chance we break into 36 bar range every day. So reasonable to think we're getting to a new low. And you get pretty much perfect follow through on 42. The bars, it's a little bit bigger than the last bar, but it's not super climactic either. So you get pretty much perfect follow through on 42. And again, pretty much perfect follow through on 43. You couldn't really ask for a much better spike than you got right here with these three bars. Chances are we might get a measure move down, maybe 60% chance we get a measure move down of some kind. But the thing you have to keep in mind is we're really close to this high. So the risk reward, this high, really is not all that good. And the odds in general favor a pullback after these strong bars because the risk is just generally pretty big. So we might get some sort of pullback. You get a pullback on 44. Generally, again, you're going to get a spike and then a channel. So we got a spike and then a pullback 44. Bear bar 45, follow through 46, doji on 47. More follow through for the bears on 48. It's a decently big bear bar. It's obviously nowhere near the size of these, but it's a decent bear bar for the channel, probably establishing the bottom of the channel. You could sell below 48, but you're probably going to get disappointing follow through because we're in the channel phase, not the spike phase. So, you expect that while we're going to stay in the channel and stay always in short, you're probably going to get pullbacks along the way. This was a pretty short channel. A lot of times you can get channels that are really long. And this one, what was it? 7 bars, 8 bars. But anyways, bear bar closing near its low on 50 and 51 and 52. But 52 starting to break out below this low. So note it's a bit climactic on 52. And then you get a giant bear bar on 53. And when you see 53, I would think back towards the beginning of the day. What did I say at the beginning of the day? You have big bear closes. Sorry, I meant to say you have big bull closes, so it's likely to be a trading range day. This probably isn't going to be a big bear trend day. And you're getting a breakout below a channel. And in general, breakouts below channels only have a 25% chance of success. And you're getting a breakout below a channel around a cluster of magnets, like I mentioned in the very beginning of the video. This measured move, the exact low, and this measured move around the low. So you're selling. If you're selling here, you're selling a breakout below a channel, already low probability, regardless, in what's probably a trading range day, so not very good. And, considering the fact that you're in a magnet cluster, so very low probability that we're just going to continue to collapse down. So a lot of traders, what they'll do is when they see 53, they'll just take profits. And if 54 is another bear bar, then they can sell again. But it's not. You get 54, which is a bull bar closing near its high. And I think 60% chance of 2 legs sideways to up once you see 54. It's a good buy, and you get follow through 55. The reason I say 60% chance is because I thought this was probably an exhaustion gap. And, what else was there for the bears to accomplish here? They had pretty much accomplished everything they were looking to accomplish. They got a big spike, a channel, and they hit all the measured moves they wanted to hit. And they're exhausted. And so they're probably just going to take profits down here, and definitely above 54. You have to get out of the shorts. And so if you have to get out of shorts as a bear, it's probably going to be a couple legs sideways to up. 55 follow through for the bulls, but tail on top, which isn't surprising because this is still a tight channel. So the follow through might be, you're going to get 2 legs sideways to up, but it might not be as strong as you want it to be. 56, bad, doji follow through, but probably buyers below. They could come in a little bit lower though. And you can see bulls bought it up pretty quickly, 57. I think if you're taking a buy like 54, you have to think about the goal of your trade a lot. What are you actually trying to accomplish? Do you think that we're going to get up here? No, there's very little chance that we get. Excuse me. There's very little chance we get up here or even to the open of the day. So if you're buying above 54, once you see 57, you basically have a 5-point scalp. And I think, you have your one pullback two, you have two legs sideways up. We'll probably get to the moving average, but you have two legs sideways up at the, during 57. And I think some traders are taking profits, causing the tail. Follow through buying on 58, still always in long. More follow through on 59 and a couple doji bars, 60, 61, essentially a high one, 60, 61. But if you bought above 54 and you didn't scalp with 5 points, you were able to make slightly over 10 points, but basically 10 points around the high of 62. So if you bought above 54 and you're able to make 10 points, I'm not really sure what else you want out of that trade. You got a couple legs sideways to up. Bulls have pretty much accomplished their goal to get to the top of the bear channel, right? Because oftentimes the top of the channel will get tested. So you've gotten your couple legs sideways to up. You've tested the top of the channel. I'm not really sure what else bulls are looking for. And that's why, we essentially continued sideways here because bulls have essentially lost interest in buying because they got what they wanted. Same way that bears lost interest in selling down here because they got what they wanted. And so you get a reversal bar down, but this is too steep to sell against. 63 bull bar, maybe always in bulls can buy again. You get more follow through, but this is just a mess. I would be out and I wouldn't trade any of this. It just nothing is all that good anymore. And so I think it just makes more sense to be flat here. For always in, I thought, okay to sell below 4, okay to sell below 19, okay to buy above 27, but I think it's kind of hard to do. I think it's better to maybe wait and try to buy higher with a tight stop. Maybe I'm wrong, but that's what I thought. Definitely a good sell any of these bars. Pretty much can sell any of these bars, but then you have to take profits down here or above here. Bulls can buy. Yeah. On the daily chart, pretty climactic top. Not too surprising. I'm actually going to use the SPY. I just prefer to use the SPY for the daily chart. And you can see we're getting pretty close to the all-time high. So we might have to get there relatively soon. But, on the ES, the all-time high, just pick a chart and stick to it. But I do this stuff all the time and just look at different charts because I thought that the all-time high on the Emini was pretty close today. You can see the high of it. This is the chart I use mostly for, I use the /ES mostly for like daily charts and weekly charts. I know I show the SPY a lot, but I usually use this chart when I'm looking at stuff because if you show the current contract, ESH 24, you can only see so much. So I like to just use the ES, which is just whatever the most current contract is. But anyways, we're very close to the all-time high on this chart. We might have to get there before we get some sort of reversal down. This is obviously a very surprising, spike, and we'll probably get a second leg up. But yeah, the monthly chart, good follow through for the bulls, but you have to be wondering if we get to this new high, we might get a big failure because if I bought above this bar, first off, it would be extremely sketchy to buy above this bar after 3 straight bear bars. But if I did buy above this bar and I got a quick scalp up of, 250 points is probably a reasonable scalp on this bar, sort of bar. I haven't really thought about it. 250 points is probably a reasonable scalp. But if you got a quick scalp buying above this after 3 straight bear bars, I think it makes a lot of sense to take profits. So, that's the day.